Welcome back. You're still tuned into Halftime Report. Well, Saatvik Green Energy, that is the stock on our radar. It is buzzing in trade after Motilal Oswal has initiated coverage with a target price of 565 rupees a share. To discuss the company's growth roadmap and FY27 outlook and a lot more, we have with us Prashant Mathur, the CEO of the company, joining us now. Mr. Mathur, good afternoon. Thank you so much for joining us. Well, Motilal Oswal is quite bullish on the stock, considering the capex that you are entering. For modules, you plan to go to 8.8 gigawatt by FY29. For cells, around 6 gigawatt. You're looking at ingots and wafers as well. So it's backward integration that you're looking at. Give us a sense of what the capex that you will be spending on all this. What is the funding plan here? And what is the asset turn on the capex that you're looking at? What kind of revenue potential are you looking at?
Good afternoon, and very happy to be back on the show. Yeah, so this Motilal Oswal report has been published today morning. So it aligns with what our growth plans is, and quite a positive report to say. So we have our capex plan in three phases. The first phase is ongoing right now, which is 4.4 gigawatt of module and 2.4 gigawatt of cell. The capex for that is close to about 1,750 crores. And part of it was funded by our IPO, and rest is debt. The second phase is 3.6 gigawatt of cell, so which will make a 6 gigawatt cell and 4 gigawatt module. So the second phase is around 1,700 crores, which will be the debt is already fixed, and the equity will be from our internal accruals. And then the third phase is 6 gigawatt of ingot and wafer. That is going to be next year. So for that, we are working on the plan, either to raise from internal accruals and debt, or maybe we'll go back to the market at that time.
Mr. Mathur, obviously for the ingot, you may look to go back to the market or internal debt. But I want to understand the recent commissioning, right, of whether you talk about the cells and modules, which you're talking about. You said Q1 FY27, H2 FY27. Is that online? Have we seen the module capacity come in online in Q1?
Yes, so module capacity, we will be starting this month.
Okay.
And the cell is also underway, and we are very positive that by second half of the year, we will start getting yield from the cell capacities as well.
Sir, there was no worry in terms of raw material prices going up. Any concern on that, given the recent issues? I'm asking because of that. Any delays or any supply issues that we faced because of that, and maybe the cell commissioning could be delayed, or there's nothing on that front?
No, our equipments have already left, so they are on the way. Part of it is already there. So no specific worries. Obviously, there have been a massive change in the geopolitical situation since February, and there have been the commodity prices also. So that has led to a lot of instability in terms of the price, and also there has been a change from ALMM 1 to ALMM 2 from 1st of June. So overall, the market has there have been a lot of changes in terms of, or challenges, I would say, in terms of that. But our job is to go to fight those challenges and keep performing in those scenarios.
Sure. Mr. Mathur, just based on what you've told us about your order book and the visibility that you have, what are you projecting in terms of revenue for FY27 then? Because you closed FY26 with obviously 110% growth in terms of sales. Are you looking to replicate that?
So we have, if you see our history, we have continuously grown over 88% CAGR. But this year, we will be growing, but it's difficult to give a number, but it seems that it is not going to be 110% over 100% growth, because we are in a situation right now where a lot of geopolitical scenarios are going on. Commodity prices are really up and down. So we will see also ALMM1 and ALMM2 implementation. So there has been a lot of uncertainty in the market, because of which there has been some pause in the demand and also alignment on the prices, because a lot of projects are
So
either
what are
were
you
ALMM1, which is now
What
shifting
are
to
you
ALMM2.
sure, Mr. Mathur, while you can't give us specific numbers, you can probably give us a range. So if you do 100%, you go to over 8,000 odd crores. But obviously, you're projecting that you're not going to reach those levels. Give us a range in terms of what you could probably see in terms of revenue as an exit rate for FY27. Is it going to be a range between 6.5 to 7,000 crores, or 7.5 to 8, a roundabout figure there?
It's not fair to give a number, but if you see the coverage report, it shows about 6,000 crore revenue projected for this year. You know, this looks much in line with what we
Around
feel would be
50% growth is what you're anticipating in FY27. Last question before we let you go. Total debt that will be in your books once the phase-wise capex is done in your books, what will your leverage look like? And since we are talking about long-term targets and revenues as well, what is the general asset turn on projects like this? And since there's overcapacity in the market, do you think you'll be conservative with or see lower numbers than that, considering that prices might fall?
So currently our debt, long-term debt is 200 crores. After phase 1, it's going to be close to 1,200 crores. Phase 2 will be additional 1,200 crores. And phase 3 will be about 3,000 crores. So that is going to be in phases. So peak debt after phase 1 will be about 1,200 crores. In terms of overcapacity, the market has now realigned towards the cell manufacturing. So the ecosystem built up which is happening now. So it is not relevant how much module capacity is there. Ultimately, 1 year, 1.5 years down the line, when ALMM2 gets fully implemented, it is going to be the cell capacities which are going to determine how much you can sell your modules. And currently the cell capacities is only 30 gigawatt, out of which only 10 gigawatt is the latest technology. So there is a lot of headroom. We feel for next 2-3 years, the cell will not have an overcapacity situation. And while the market is also expanding with the kind of geopolitical situation there is, a lot of focus on electric vehicles, cooking, moving electric, and also data center, AI. There is going to be very high demand for energy, and most of it is going to come from renewable energy. So we feel that the demand is going to continuously grow up, and overcapacity does not seem like for the next 2-3 years. And then ALMM3 will come, wherein ingot and wafer will become the norm based on which the capacities will be measured.
Okay, just one number, sir. Margins, obviously we've seen a decline, but we're making a lot of investments. So will it be at the levels of FY26 around 12 to 13% for FY27? Is that the new normal right now?
Yes, it should be around the same number. That's what we are projecting.
Okay, sir, thank you so much for... Okay, sure.
In the first, second quarter, we may see little dip because of the geopolitical situation.
Okay.
But what we feel is that once our cell manufacturing starts giving revenue, that will add in to the bottom line, and we will have a blended EBITDA of about the same which we were at last year.
Okay, Mr. Mathur, thank you so much for joining us on the show this afternoon, giving us an understanding in terms of the outlook of the company, current trends, pricing trends, and what we're keeping an eye on. So thank you so much for that. That's the management of Saatvik Green Energy for you all.
For over 25 years, CNBC-TV18 has been the guiding force for investors, steering them through the markets.
Start your trading day with cutting-edge insights and expert analysis.
Seize every opportunity by decoding the forces that drive the market. Equip yourself with strategies and guidance from India's biggest market mavens.
Invest with confidence as we beam live from the CNBC TV18 Motilal Oswal studio.